Hey, welcome back to my YouTube channel this Monday evening. We're going to begin taking it for the remainder of the second quarter. We're going to be taking a look at three different ETF funds, all targeting income, monthly income, trying to boost monthly income. Okay, JPMorgan Equity Premium Income ETF, Global X Nasdaq 100 Covered Calls ETF, and Schwab U.S. Dividend and Equity ETF. And my interest in these funds stems from the fact I'm just not convinced that my Social Security is going to last for the next 20 to, maybe not even the last 10 years. It's certainly not the last 20 to 30 years. Okay, so I'm looking at some way to replace my income, all right, on a monthly basis. So let's start out by looking, of course, before we get started, you know the standard disclaimer, right? This video is for educational purposes only. It's not intended as financial investment or trading advice. And of course, two videos as always. First one, stock charts returns. Second one, forecast. Let's jump right in again to JPMorgan Equity Premium ETF. Let's take a look at our ever popular moving averages. 100-day moving average, 21-day average. Good news, we're back above the 21-day moving average, moving up towards. We even kissed the 100-day moving average. Hopefully, this is the beginning of something big. All right, something big. And it could be something good here. You know, what's interesting to me, prior to here, okay, last 6 months, there was some positive negative momentum, but it wasn't like really crazy. Nothing like we see here. But now we see, this is the second fund we see this kind of moving back up above the signal line. This is a pretty strong histogram bar right there. Hopefully that's beginning of something big. First and last close of the month, you can see 10 of the last 12 months, including the current month to date, the last closing price is higher than the first closing. Of course, everybody got beat up in March, right? Bollinger Bands, some more volatility as it crossed underneath the moving average, following the -2 standard 2 deviation. Now it's moving back above, kissing the +2 standard deviation line. Okay, cumulative returns. The good news is you invested back here April last year, you're still up about 10% on the year. Okay, and that which means you're up about $1,000 overall. And again, this is probably what you expect from an ETF, but this means pretty much that there's not a lot of drawdown. Plus, there's lots of highs and not a lot of really serious drawdown activities. Okay, so that's your first video. Second video always is what? Forecast.